If you've never felt really comfortable understanding how taxes work and how your refund is calculated, this is definitely a video that you're going to want to watch and you're going to want to share with all of your friends. Hey wealth builders, it's Akiva and welcome back to another episode of The Bemused. So this month we've been talking all about taxes. We've covered the pros and cons of getting a tax refund, we've talked about how to file your taxes for free, and we've talked about some common tax deductions that college students and recent grads can take. And if you missed any of those videos, I'll make sure I link it in the cards above and in the description box below. So today we are tying it all together and bringing the curtains down on our January tax series. We're going to be explaining exactly how your income taxes are calculated and 10 tax terms that everybody should know. If you're new around here, welcome. On this channel, we help young adults just like me make sense of all things money. So if you're into that kind of thing, I hope by the end of the video, you'll choose to come join the squad by hitting that subscribe button and turning on post notifications by hitting the bell so that you never miss a single post from us. So if you haven't heard, the IRS went and redesigned the whole format of the tax return this year. In a past life, there were 3 different types of income tax returns, but that is no more. So here's the way I'm going to approach this video. I'm actually going to walk you through, or more like jog you through, because we don't got all day here, the actual brand new tax return. And before you hop off the video, trust me, it is not that bad. Let me tell you, this is not the way that they teach income taxes in school, so you guys are in for a treat. So this, friends, is the face of the brand new personal income tax return, also known as the Form 1040. There's 6 additional schedules that go along with this 1040. You may not need all of them to file your taxes. I, for example, will only need about 3 of them this year. Now, the first tax term you need to know is total income. Now, you're probably like, come on, Akiva, total income? That sounds pretty self-explanatory. Maybe, but there's a lot of things that should be included in your income that a lot of people forget about. Total income includes all of your income from all sources. Anything you've made from working, your salary, tips, interest on your bank accounts, dividend income from investing. And if you flip over to the first schedule, Schedule 1, you'll also see that you need to include net income from your business or side gig, gains or losses from investing, gambling winnings, prizes, lottery winnings, even bingo if you're into that. And your total income all ends up here on line 6 of the 1040. So now we have our total income. The second term you need to know is an adjustment. Adjustments lower the amount of your income that is subject to tax. These also go on Schedule 1. A notable one is the adjustment for contributing to your traditional IRA. This is also where the student loan interest deduction goes, which we covered in a previous video. Adjustments are also called above-the-line deductions because you get to claim them whether or not you itemize your deductions, which we'll get into in a minute. Now, after starting with your total income and subtracting your adjustments, you now get to your adjusted gross income, or AGI for short. Your AGI is one of the most important numbers on your tax return, so you're going to want to make sure you pay special attention to this one. This is the number that determines your eligibility for many tax benefits, and even benefits outside of the tax world that are based on income, like qualifying for certain types of housing or having the ability to file your taxes for free, like we talked about in our last video. Next up, deductions. Like an adjustment, deductions also lower the amount of your income that is subject to tax. Now, at this juncture of the tax return, you have 2 paths that you can choose to go down. The first path is itemized deductions. These show up on what's called a Schedule A. So your Schedule A is totally separate from any of the 6 schedules that we talked about previously. These include things like real estate taxes, interest paid on your mortgage, and charitable contributions. But Akiva, I'm like 22. I don't own a house and I don't give that much to charity. So if I were to itemize my deductions, I'd only be able to deduct like $1,000. Well, that's where path 2, the standard deduction, comes in. The standard deduction is the standard amount of money that you're allowed to deduct from your AGI no matter what to get to the actual amount of money that you are going to be taxed on. For the 2018 tax year, that amount is $12,000 if you're single and twice that if your filing status is married filing jointly. And in 2019, it's a little higher than that. So now we've taken out all of our adjustments and deductions to arrive at taxable income, which is the actual amount of money that is subject to tax. Now is the time that you apply your tax rate to calculate how much you owe. Your tax rate is determined by your tax bracket. Your federal tax bracket ranges anywhere from 10% to 37% of your taxable income. And I'll put a link in the description box below to where you can find out the tax brackets and tax rates for 2018. It's also important to note that not all of your income is taxed at the same rate. The US tax system has what's called marginal tax rates. For example, let's say you're a single person and your taxable income is $30,000. You can see here from this schedule that you'd fall into the 12% marginal tax bracket, which means that only the amount over $9,525 is taxed at 12%. The first $9,525 is taxed at 10%. Different types of income are also taxed at different tax rates. For example, certain types of investment income are taxed at a lower rate than your regular income, ranging from 0% to 20%. So now you've multiplied your taxable income by your tax rate and you've determined how much you owe. Now it's time to apply any tax credits. Credits directly reduce your tax bill dollar for dollar. Some notable credits include the AOTC and the Lifetime Learning Credit that we discussed in a previous video, which again I'll link in the cards above and in the description box below. And after subtracting your credits, ladies and gentlemen, we have reached your actual final bottom line tax amount due. The 10th and final term I want to talk about is the underpayment penalty. So once you get to the actual amount of tax due, you now have to make sure that you've paid in enough money to cover that tax that you owe. For many of us, our tax payments are withheld from our paychecks and made for us through our employers. And for those of you who are self-employed, you have to make your estimated tax payments throughout the year. Regardless, the IRS can impose a penalty on you if you haven't paid in enough money to cover the tax that you owe. This is the underpayment penalty, and it's 0.5% of the total amount you owe, calculated for each month you haven't paid the tax. The good news is that this tax season, the IRS is being a little bit more lenient with the underpayment penalty rules. And I addressed this actually in a prior daily tax tip that I shared on our Instagram post. And I'll actually insert that clip right here so that you guys can see it and I don't gotta repeat it. So in case you didn't know, if you haven't paid in or had withheld from your paycheck at work, the lesser of 90% of the tax that you owe this year or 100% of the tax that you owed last year, the IRS issues an underpayment penalty. This tax season, because there's been so many different changes with the new tax law going into effect in 2018, the IRS is choosing to lower that threshold to 85% of the tax that you owe. So that'll give a little bit of relief to taxpayers who either haven't withheld enough from their paychecks at work or haven't paid in enough estimated taxes if you're a freelancer or an entrepreneur. So there's some good news for you. So this brings us to the end of the tax return. And if you've made it this far in the video, congratulations. So that's a brief overview of how taxes work in the US and a brief look at the new Form 1040. I sincerely hope this made sense to you guys and that you walk away with a much better understanding of how taxes actually work. I know I struggled with the best way to approach this video, so if anything was unclear to you, please let me know in the comments below, or you can DM us on our Instagram. We're also continuing in our daily tax tip series on our Instagram through the end of the month, so make sure you check us out over there. If you want to check out the other videos that we've covered in this tax series, there'll be a playlist showing right now in the bottom left corner of your screen, so click on that for more. If you're tired of hearing me talk about taxes, there'll be another video picked just for you on the top left of your screen. Thanks so much for watching, and I'll see you guys in the next video.